From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 20th, 2016. I first want to apologize for no video analysis on last Friday, the 17th. Due to some power outages here around the area, my office did not have power and I was unable to get online and record the video and post it, so I apologize for that. We should be back in action this week. I hope you had a great weekend and are ready to get started with trading for this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we'll be looking for entry and exit opportunities. Once again, this week's news calendar is full of high-risk events leading up to Thursday's Brexit referendum. That could spur on some significant movement, and you'll want to make note of those on your financial calendars, of course. Let's get started here on the USD CHF, the US dollar versus the Swiss Franc. I'm going to zoom out actually one more time here on the dollar franc daily time frame. Take a wider angle view of this currency pair because I think it's important for us to remember what the trend was over the past several months. We're going all the way back into October and November of 2015. We reached the highest high here on the chart and then started a downward sliding channel as it went down, back up, down, up within the channel. We tried to break out of it just a few weeks ago. Non-farm payrolls out of the U.S. causing a sell-off of the U.S. dollar, got right back inside the channel. So here we are, once again, inside of that channel. So that's very interesting here for the U.S. franc. If it continues to slide lower, of course, there's a possibility we even see a new low made back down towards the 94 or even the 9,300 level, the bottom of that previous channel. Now, the black box that we're seeing right now on the chart, the current area, is a little bit of a period of congestion or range between the pink and the blue shaded area. And that's not too surprising here because we're leading up to a significantly volatile event this week, and the market can often go into some ranging prior to an event like that. And so that's what we're seeing here on the franc. Down around 9,600, 95.80 or so is the pink shaded area at the bottom. The blue shaded area, 96.70, 96.90. These areas will be what we want to watch this week. If it breaks down through the pink shaded area, we could begin looking for that slide lower. Open and close underneath 95.80 could produce a sell opportunity here for this currency pair. As long as it's above that, though, above the pink zone, I don't think I'm really ready to call this as a sell until it breaks through that pink shaded area. So as long as it's inside or above it, I don't think selling is a good idea. We'll wait for it to break underneath it. The other opportunity to go short, of course, would be all the way back up at the blue shaded area. And of course, we're nowhere near that at the current moment. Otherwise, we could be watching for clues to support and reversal. Price action that implies reversal down here into the 9,600 level, getting back above 9,600, maybe creating on smaller time frames higher lows, could give you an opportunity to buy off of this pink shaded area, especially if we see some news early on in the week that implies some strength for the US dollar. We could be looking for this to take a turn back up towards 96.70 for a short period of time before we get into Thursday's referendum vote. Taking it down to the 4-hour time frame won't really change it at all, but you can see what we're looking at on the smaller time frame, 9600, the pink shaded area, holding as our support. Getting back above there, I think, will be the clue we need to see if it's going to take some sort of turn back up into the upper 96s toward 9700 for the U.S. franc this week. Of course, over here on the EUR USD, the euro versus US dollar is pretty much the exact opposite, where we've seen the franc taking a lower turn over the past few weeks, but going into a range. We see this one looking lower over the past few weeks, but volatility over the past several days have produced some significant movements here for the euro dollar, and I think it could even get stronger significant volatility as we get towards Thursday. That the potential referendum, the split from the UK from the EU could cause significant volatility here for any euro pair or British pound pair for that matter. But specifically here, even this weekend, we can see the market opening up here much higher than it closed on Friday. So very significant movement. Be cautious and careful about trading this pair. Current resistance is 113.55 to 113.75. That's the blue shaded area you see on the chart. Next resistance area, 114.05, 114. 30 or so, that's the green shade area. So we know where a couple of the resistance levels are currently holding the euro from going higher. Of course, significant volatility this week could change all of that. Highest high, the highest resistance zone here, 1485. 1525, the pink shaded area, significant for a wider angle range year and a half that we've been in for this pair. Of course, significant vote this week could change all of this. But moving lower, of course, right now, currently we're sitting on top of the orange zone, 1320, 1300. Any move underneath 1300 today could see some pullback of this gap that we have from the weekend. Anything underneath 1300, we're likely back down towards the 1250, 1240 level, the yellow shaded area, or even lower, back down towards 1200. So significant volatility. Be cautious on trading this currency pair this week. GBP USD, nothing new. We expect volatility this week, and that's what we're getting already. Starting last week, Thursday, Friday, we could see the support low down here, significant reversal as it started moving back up into the 43s. Even with the open of the week, we see it moving all the way back up here into the 46s. If this is something that's surprising to you, then you haven't really paid attention to the news. So this shouldn't be surprising. Significant volatility over the next few days. Be very cautious about trading this currency pair. If we zoom it in a couple of times here on the daily time frame, let me see if I can get this yellow shaded area selected, and I'll pull it over just a touch if I can get it selected here. It's trying to. Let me see if I can get right on the corner of that. Well, so far, unable to get it selected. Well, for some reason, it doesn't want to grab that. Anyway, we'll just look at it right here into this area. We're looking at this yellow zone, if I could get it to select it, would be between 4670 and 4700. That's the yellow shaded area that would be right at the cap of the current candle. The next area you'd look for would be 4600. That is the support. For whatever reason, I can't get these shaded areas to pull over here. So here's your resistance currently, and here's your support currently. Again, the Brexit vote this week could significantly change all of this here for this currency pair, so just be very careful about trading the pound dollar this week. A breakout above 4,700 could signal the turn back higher here for this currency pair, and a change back to a significant uptrend for the pound dollar. Let's take it down to the 4 hours, see if I can get those shaded areas selected on the 4-hour chart. There we go. Finally got that one pulled over here like this. And we'll get this pink shaded area now pulled over as well. Got that one selected. So you can see where the current support is. That is, again, 4,600 down to 1.4580. Yellow zone, 4,670 up to 4,700. That would be the yellow zone resistance support. Definitely being cautious on trading this pair. If you're going to go short, try to get as close as possible to the yellow zone or under the pink zone. If you're going long, I think you need to be cautious because we're at the top of the trend right now for the pound dollar. Moving on over to the USD CAD, of course, we often talk about oil when we discuss the US CAD. Oil prices moving back up a little bit for the past couple of days. So moving up on oil prices causes the US CAD typically to inversely correlate and go down. And that's what we've seen Friday and today, still moving a little bit lower. But no significant new low being made. You can see the last low here. So be very cautious here about assuming it's going to go down. In fact, if I put this blue trend line along the last two lows, you can see we're still above that. So that's definitely something that should weigh on your decisions here. And in fact, if I put another trend line capping out the two highs, you see somewhat of a triangle pattern developing here. The closer we get towards 2780, 2750 could produce some support and a turn back higher. A breakdown of that, though, and a continue of oil price rise, we could look for this to break down and make a new low. So looking at that triangle, we're approaching the bottom. I'd be cautious about going short. Take it down to the 4-hour time frame. We're coming back down into support. Take a look at the yellow shaded area here. In fact, let's take Fibonacci from the lowest low to the current resistance high with Fibonacci, and I'm going to take the older one off that's on the left-hand side. So you just have that one singular fib, 618 right around 128.18, and that's where the current market is. 786, 127.50 or so down at the bottom of the yellow zone. So we'll look at the yellow zone today as your support. That's 127. 85 down to 127.50. That's your yellow shaded area. Underneath there, you could look for it to continue to go lower and challenge the lowest lows on the chart. If it turns back higher, obviously resistance right now 128.45, 128.80. That's the orange shaded area that sits just above the chart. If it breaks back above there, you'll look for it to go higher. Again, keep an eye on those oil prices. If we see the continued rise of oil prices, we look for this to go lower. So watch for selling opportunities into the orange zone or break under the yellow zone. If oil starts to shift and go back in the other direction, if oil prices start to go back down, then we look for this to maybe turn back above the orange zone and back towards the blue shaded area here on the chart. Keep an eye on those oil prices. I think those will dictate some of the direction you look for here on the US CAD. Taking a look at the USD JPY, we are into significant historic support lows. We're all the way back here into 2014, the last time the market was down into these price levels. So definitely watching that here on the weekly time frame for the US yen. Historical support lows from the left-hand side. Back here with his blue boxes. You can see that blue box here zoomed out. So you know that we're currently prices stuck right in the middle of that blue box. Take a turn down to the the daily time frame. Let's actually zoom it in. You can see some pullback here. We saw the dip all the way down into the 103s, pull back over the past couple of days. Resistance right now just underneath 105. Let's go ahead and take it on down to the 4-hour time frame. Look at the congestion zone that we're in right now. We can see resistance 104.80 to 105. If we're going to see this go higher and turn back up again in an uptrend pattern, it's definitely going to need to break back above 105. So I would not buy it unless it breaks back above the 105 level. Currently, we're finding resistance. I might even squeeze this yellow zone in a little bit. Support into that yellow shaded area. Let's call that 104.50 to 104.30. That is your current support. Not too hard to see that since market open. 104.50 to 104.30 has found support. If you're going to go short, you need it to either go back underneath 105, the blue zone, or break underneath the yellow zone. So these two areas right here, yellow and blue, will be significant indicators of direction for us this week. Under the yellow zone, we start to head back down towards the orange zone. Above the blue zone, we could start to look for this to go back higher again. I might even shift this around for the time being. Let's pull this purple zone right back around like this into this area. It might be just a touch different, but somewhere up there into that purple zone will be your next resistance above the blue zone. So getting above 105, we're into 105.80 to 106.30. That's the purple shaded area. So watch this area down here. Always difficult to sell at the very bottom of a downtrend, but if we're going to, we need it to go back up to the blue zone or break the yellow zone. Otherwise, potential buy opportunities could unfold this week for the US yen. Next, moving over to the AUD USD, the Australian versus the US dollar. Again, significantly correlated over there towards oil since we've seen oil prices rising over the past couple of days. Not too surprising that we see the Australian dollar rising as well with that correlation for the oil prices. Testing resistance highs right now. Let's go ahead and zoom it in here on the daily time frame. Take a look at that orange shaded area, 74.65, 74.95. That was significant resistance here, even support over here on the left-hand side of the chart. So if you're going to buy this currency pair, again, let's go that direction for the moment. If you're going to buy this currency pair, looking at the rising oil prices, you either want it to dip again down towards the 74.10, 73.80 level. That's the blue shaded area. You either need it to dip back down into support or break through this current resistance zone, which is the orange shaded area, 74.65 to 74.95. So those are the two reasons to buy this pair: dip to the blue zone or break above the orange zone. Otherwise, on the other side of the story, if we start to see those oil prices slump back again, find resistance, go back down, then we also watch for this currency pair as well to find resistance into the orange zone, 74.65.95, and start working its way back down towards the blue shaded area. Of course, there's other news factors that would affect this pair, but that's at least at the very beginning of the week has something for us to watch. Orange zone resistance, blue zone support. A breakout of either one of those could look for either a continuation of the upside or a reversal back down towards the downside here for the Australian dollar this week. And lastly, moving over to the NZD USD, similar to the Australian dollar, those oil prices, rising oil prices, we've seen this continue to push it back higher once again here for the Australian dollar. Taking a move right now above the 7,075, 7,040 level, which was, over the past several days, resistance Now pushing above that purple shaded area at the top, we're looking at it challenging towards the last recent resistance highs towards the 7150 level. So we can clearly see where our two support resistance levels are. The blue zone 7150 to 75. The purple zone 70.75 down to 70.40. That is your purple zone support. Let's go ahead and take it down to the 4-hour time frame. You can see the congestion in that purple zone, so that becomes clearly your current support. And we know that, of course, the resistance high is the blue shaded area up here at the top. If you're going to go short, what would you do? You'd wait for it to touch the blue zone and maybe give you a clue to reversal. That would be your first opportunity. Back up here towards 7150. You don't really want to go short sitting on top of the 70.75 level, the purple shaded area, because it's likely to find some congestion and support there. Only looking for the breakdown through that purple zone underneath 70 or 70.40, 70.50. We then look for it to head back down into the 6900s, which is the orange shaded area down here. So purple zone is kind of a hinge point right now. Above it, we tend to look for it to go back up towards the highs. Below it, we tend to look for it to go back down again. So the purple zone is a significant hinge point. Sellers, again, you don't want to sell it unless you see signs and evidence of reversal. I don't think one candle, not even a closed candle, is a sign or evidence of reversal yet if you look at the current candle. So it either needs to come back up to the blue zone, lower risk, higher reward, give you evidence of reversal to go back down, touch the purple zone, evidence of support and reversal to go back up, break of the purple zone, begins to look for it to go back down here towards the orange zone for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.